Welcome to Fraud Friday. I'm Bob Coleman. Today I want to talk about Wednesday's press release from the Department of Justice, where KeyBank settled a PPP loan fraud allegation for $7.7 million. Now, when lenders settle, they do it without admission of guilt. The government is more than happy to say, we'll call it no harm, no foul, as long as you give us money. In this case, a check for almost $8 million. It's centered around a PPP loan fraud of a rogue employee. So let me tell you about Tommy Hawkins, who was sentenced in this case to 65 months in jail. What he did is during the COVID crisis, he had access to obviously KeyBank's portal, the SBA portal, to approve loans. And he approved 38 loans for $5 million, and each of them were fraudulent. What was his motivation? He received a kickback, that's of $5,000 for each loan he approved by this gang. So he spent 5 years plus in jail, lost his career in banking for $190,000. Let me talk about the gang. And it's a well put together gang. The ringleader, Eric Rivera, and he was described as being charming, a charming demeanor, persuasive skills. He could convince anybody to join the scheme. Now, so he convinced Tommy to do this and, hey, we'll pay you money. And he had a way of making people feel at ease when discussing illegal activities. His ability to recruit others was crucial to the success of their operation, allowing them to expand their network and increase their profits. Legal disclaimer, Mr. Rivera is awaiting trial. He is innocent until proven guilty. Part of the ring was a James Wessel. He created the fraudulent tax returns. And with years of experience in accounting and finance, his attention to detail was unmatched. There was a Corey Sargent with the logistical mastermind who could move the money, ensuring that the funds were moved quickly and efficiently to minimize the risk of detection. Well, he didn't do a very good job based on, he was found guilty along with Mr. Wessel and along with a Lisa Smith. Now, Lisa Smith's an interesting character. She had a knack for understanding exactly the paperwork that the lenders wanted. She was the mechanic of putting all this together. You want a tax return, we have a guy who'll do it. You want to recruit fraudsters. Eric was out there doing that allegedly. And she could tailor each application to meet the lender's expectations. Quote, her skills extended beyond paperwork. She was also adept at managing people, ensuring that everyone involved in the scheme knew their role and executed it flawlessly. So this gang of four, Mr. Hawkins got involved with, and then he started processing these fraudulent loans. Let me tell you about what Rivera did. This is an email that the feds found. It's quote, go get that bread, bro. You know what to do with it. When a recruit messaged Rivera that he did not have tax returns for 3 of his businesses, Rivera replied, not a problem. I know they charge $300 to $500 to do it. Back to James creating his financial returns. So you have this group who saw an opportunity and took full advantage of it. So why did KeyBank pay $8 million to settle this? It was a false claim act. And this is what KeyBank did. Now, the prosecutor, I guess you can, that's the wrong word, the U.S. attorney said that one of KeyBank's failings is that they failed to work with SBA and notify them. Well, in fact, back in spring of 2021, so this is about a year later, that they detected suspicious patterns in Hawkins' origination of new business accounts. After an internal investigation, KeyBank disclosed to the SBA its concerns. So KeyBank did the right thing. And not only the right thing, the legal thing. Hey, we have a problem. This is what we have. We think there's fraudulent loans, so they did the right thing. KeyBank's auditors identified dozens of additional loans and disclosed those to the SBA as well. Now, While they detected the fraud and they had concerns, this is what the DOJ had a problem with. When you got the PPP loan and you spent the money, you then applied for forgiveness. Well, what the DOJ alleges is that KeyBank then took those fraudulent loans and forgave them and said that they were used for the intended purposes and they had the appropriate documentation. That was the document trail that KeyBank got in trouble with. And of course, the DOJ said, hey, that's a false claim. You're representing to the government that these loan funds, which were used to reimburse for employees, were not done that. And of course, they spent the money on the normal stuff. For example, Eric Rivera spent most of his money at jewelry stores, clothing retailers, and cash withdrawals. Where have we heard this before? Hotels and casinos. Another company took out the cash. And I forgot to add this tidbit. The group even had a system in place to launder the funds. James Wessel allegedly created fake employees, printed payroll checks, and had individuals cash them and return most of the money back to the banker, Hawkins. So while KeyBank on one department said, we have this problem, when they submitted the documentation for forgiveness, they took a look at this documentation and said, yeah, it's fine. And we're not going to have these borrowers pay back these loans. These are forgiven under the terms of the program. And that was the false claim that the Department of Justice said. So KeyBank, instead of fighting that allegation, they said, fine, we're going to settle with them. We're going to reimburse whole the government for those $6 million. The settlement was, as I said, $7.7 million, so a little bit of overhead in there, and not to fight it. So the problem in this comes down to documenting the paperwork and lying to the government. The Department of Justice said, hey, bank, you lied to the government about that these loans should have been forgiven, and they weren't. So that's an interesting twist in terms of where the fine came from. The fine did not come from the rogue employee. I used the word fine. Obviously, I meant the settlement came from not from the rogue employee's actions, but came from the filing of the paperwork back to the SBA. In terms of how I feel about this, KeyBank did everything right. They went ahead and they disclosed it right away. They disclosed it to the proper authorities, obviously to the Inspector General, and the FBI got involved. Mr. Hawkins got a just sentence. Well, if you think about 65 months in terms of $6 million, if you look at other types of losses to the government, that is on the high side. But obviously, there's an enhancement if you are someone in position of authority to approve these loans, taking kickbacks in cash from this group, and that's why he got such a stiff sentence. And also look at this is 2026. This is 6 years after all of this occurred. So while the wheels of justice grind slowly, they do continue to grind. And I have absolutely all in favor of going after these fraudsters who did defraud the program, who give reputational risk, using that term in another context, to the lenders, as well as to the SBA lending industry, and obviously to the detriment of small business Main Street. Fascinating case, another fraud where you have a group of people who think they're smarter than everyone else. You have a banker who isn't thinking of the end game. Yeah, I can get away with this. And in the end, everyone loses. I'm Bob Coleman. Thank you for joining me for Fraud Friday.